please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Here with Bazaar. The BEML stock has been very volatile since the Karnataka elections. There's been a lot of talk about whether the stake sale is happening or not. That's the central government's 26% equity that they're planning to sell. Plus, of course, we need to understand how business is shaping up looking at FY19. So we have with us Mr. DK Hota, Chairman of BEML. Good morning, sir. Thank you very much for being with us. You know, first things first, now state elections are out of the way. I just want to understand if you have heard anything fresh from your shareholders with respect to what the thought process is, because the understanding was that the Karnataka government, the earlier Karnataka government, was not in favor of a stake sale. Any deliberations, any discussions that you've been party to?
Well, I think to be fair to BEML, you must look at the overall results that we have churned out last year, which has been fantastic. As far as the stake sale is concerned, you would have heard that the government has of late taken a call to reduce its holdings in various CPSEs. Now, as far as BEML is concerned, you must be aware that transaction advisor had been appointed, legal advisor had been appointed, asset valuer had been appointed. Initially, a report had been submitted to the government. I believe the ministry has been told that further due diligence needs to be done. So we are awaiting for further directions on this matter from the government.
Any rough timeline that the government is looking at?
Well, you are aware that the government has a target of 80,000 crores during the year. So this is best answered by the Ministry of DPAM. They would be in a better position. I really can't make any guesses on this at the moment.
Okay. Back to business then, Mr. Hota, your order book had declined in FY18 if I compare it to the prior year. The reason for that and what should we expect going ahead?
Actually, my order book position at the moment is roughly about 6,700 crores. And during the year, I'm expecting substantial orders. During the year also, we are expecting to give you 30% again increase over last year, which would be something crossing 4,000 crores. So I think the order book position in itself doesn't mean much, except that when you look at the order book and see what is executable. Now, during the year, my executable orders are substantial, except in mining and construction, where every year, anyway, it's a hand-to-mouth. There we expect orders to the tune of 1,300 crores to take us to maybe about 1,800 crores. That's a target for mining and construction. As far as rail and metro is concerned, we have substantial orders. These are long lead items. So I expect to do about 1,800 to 1,900 crores this year in rail and metro. As far as defense is concerned, last year we did about 500 plus. This year we hope to substantially increase to something like 1,000 crores. So while you will add up all these numbers, it comes to much more. We would like to give you overall guidance of 30% increase over last year in the overall turnover.
Okay, so 30% increase in revenue should be maintained. As you go further with the execution, sir, what will the margin profile look like as you scale up on different sides of the business? Metro. I mean, I'm just trying to understand which business will generate the maximum margin and whether that will help overall blended margins this year.
Overall, this year we are expecting to increase our spares sale in defense. For example, from last year number of 150 crores to this year 400 crores. That is something that's going to give us a lot of traction in terms of profitability. In the mining and construction, we have the high-end equipments, the 150-ton and the 200-ton dump trucks, for which we have got trial come sale orders. We expect some more trial come sale orders during the year. Now, these high-end equipments give us improved margins as compared to the lower-end models. If you look at railways, yes, the metro is a very competitive space, but we also have a memo order which we are executing with the railways, and that should give us good returns. Net, I will not be able to give you a number on what the margins are going to be, except to say that it's going to be better than last year.
Well, maybe a band, sir, if not a specific number, a rough band that we can work with?
As you rightly said, markets are very volatile. Today, you would have seen the kind of trade wars that are looming large. Suddenly, indigenization, which is a very important thing for BEML, you might see a lot of orders coming to us. So it's really very early to give you a number on that, but it will be better than last year.
What is the capex plan for the company across your various segments?
Well, capex last year we did about 70 crores, and this year we are hoping to at least, close to doubling it. And this would be basically in terms of getting new technology, looking at our aerospace division, some investments there. We are looking at expanding capacity in the rail and metro. We are also going to be executing a big order for the defense, which had been hanging fire for a long time, the ARV, Armored Recovery Vehicle. We are hoping that issues connected with that would get resolved soon. So these are the three areas where we are going to be investing in capex.
Sir, I'd just like to come back to the stake sale issue. While I understand that obviously you told us that the due diligence process is taking some more time, there were a lot of, initially when it was announced, there were a lot of interested private parties that had shown keenness, including the likes of, the Kalyani Group, etc. Are a lot of those names still showing that level of interest because of the delays? Or perhaps will we see, some of the entities like perhaps LIC come and pick up a bit of a chunk?
Well, this is something, for example, let me put it this way. BEML has a lot of strengths in all the three verticals. I would be surprised if anybody was not interested in the stake sale of BEML. Having said that, you must appreciate and understand that BEML has three verticals. One is the rail and metro, one is the mining, the other is defense. Now, it depends on who the suitor is and what kind of strengths they have. You have very few suitors who have strengths in all the three verticals. So that's something to be considered while looking at possible suitors.
All right. Thank you, Mr. Hota, for your time this morning. That's the word from BEML on the stake sale. Due diligence is on, and they're targeting a 30% increase in their turnover in FY19. By the way, for the mid-cap space, the gains are only getting bigger. So now it's a 140-point rally, up about 0.7%, with the advanced decline ratio improving as we speak. Get into a break then. On the other side, we'll continue our focus on real estate companies post the change in accounting practices. Saurabh Chawla, the Group CFO of DLF, joins us next. Welcome back. At the high point, above that 10,820 mark, as pharmaceutical continues to power on, and heavyweights like Reliance Industries, ITC, State Bank of India, L&T, and all contribute to the upside. The stock which is on our radar right now is DLF. Real estate companies are in focus post the accounting changes. In AS will be in focus from the 1st of April 2018, which means FY19 numbers will get impacted. Joining us to outline the impact is Saurabh Chawla, the Group CFO of the company. Good morning, Saurabh, and thanks so much for joining in. One of the key impact will be that now as you transition to a completion methodology, some of the profits or some of the revenues that you had accounted for on your ongoing projects or incomplete projects will now have to be written back. If you could give us that number, what could be the extent of the profit write back? How many projects are ongoing for you which will get impacted by these accounting changes?
Well, at this stage, I cannot give you any numbers. This is currently under evaluation, and will be audited and then disclosed in our quarterly results. But what I would like to add is that all the reversals will have to be through the reserves. And as we go forward, as most of our projects are completed and are in the process of being delivered to the customers, it will have a substantial positive impact on our revenues and profits as we go forward. So the whole methodology of capturing on a percentage of completion method basis will change. It will be only on a completed method where a property is being delivered and accepted by the customers. So from our perspective, given the fact that most of our projects have been completed, in many cases the property has been delivered. Excluding those properties that have been delivered, all others will get captured going forward.
Saurabh, morning. We were just speaking to one of your peers a while back on this, and they highlighted another important facet of this Ind AS 115, that advances from customers apparently need to be treated as debt, as loans. Now, that will have a bearing on the way the balance sheet looks, right?
No, it will not be treated as loans. It will be treated as it will be like a current liability which is there, and it will continue to be treated in that fashion. There have been some speculation in that space. Our understanding is, as it is followed into IFRS, Ind AS will be following the same guideline and same path, and hence you will see on one side current liability getting built up as advances from customers comes, and on the other side the inventory value will get built up. In our case, in DLF's case, as you are quite aware, we have changed our business model. We will not be doing pre-sales, and hence for us, even if it is to be treated as debt, will not matter, because we will be constructing new properties using internal accruals and also some form of construction finance, which is actually debt anyways.
But Saurabh, when you write back a portion of your profits, it will come from the net worth, right, from your reserves. So that optically will impact your debt to equity. So do you expect that to affect your borrowing costs or your credit rating?
No, it will not. Frankly speaking, these are accounting changes. And from our perspective, from DLF specific perspective, as you're aware, our net debt is down sharply ever since we did the GIC deal, and I think in next 1 or 2 quarters, the balance amounts of money and further reduction of debt will happen. We are targeting net debt zero position by end of this fiscal year. So for us, actually, whatever may be the net worth, the debt equity ratio will not have any significant impact.
Okay, Saurabh, then on to happier discussion. Apparently, you did give some very optimistic sort of pointers at the Morgan Stanley conference when you were talking about the business and what you see going forward. Correct me if I'm wrong, but I think your existing inventory is about 15,000 crores. Some idea on how sales are moving and what your targets are for this year?
Yeah, so it's around 15,000. We sold about net sales of about 750 crores in the last quarter. So to be more precise, it will be 14,250 crores. We have given a guidance on a steady state basis of sales being in the range of around 2,000 to 2,500 crores on an annual basis. This is in line with what we see in the micro markets across various geographies where we are present. We believe that the ground situations in many of the micro markets have improved as a lot of resolution of companies which had started real estate projects but now have run into rough weather. As those situations get resolved and capital gets unfreezed, the capital circulation will happen, and that's what we are seeing now as demand started to emanate.
Okay, just a clarification. When you say sales guidance of about 2,000 to 2,500 crores this year, that's as per the new guidelines? That's as per Ind AS 115 or the earlier percentage completion method?
Again, let me clarify to you. When we are already sitting on completed inventory, we are selling actually completed projects, and we will be recognizing the sales as per the current accounting guidelines. Had the earlier guidelines been applied, the difference would not have been substantial because most of these projects are also completed. So even if it was on a POCM basis.
Okay.
So as we go forward, if we sell anything worth 10 rupees and EBITDA margin is, let's say, 5 rupees, it will get recognized in a short period of time when the full payment is made. In a POCM method basis, so you have long cycles of customer payments of 3 to 4 years, and hence the revenue and profits actually get captured over that period of time. So we are sitting quite pretty, I would say, both from completed inventory basis, from the perspective of the status of our projects. They're all at the close of their completion cycle, and of course, the new methodology of accounting standards, which are actually followed globally, because only in India that we were following construction method of accounting. We're quite, I would say, confident and positive going forward.
Okay, sir. We leave it at that. Thank you very much for joining in. Let's get chatting about the power stocks. Interim Finance Minister Piyush Goyal has met the Power Minister on the resolution of power troubles. Stressed power companies will be presenting their case before the ministries this week. Anshu Sharma joins us with the latest on that. Anshu?
That's right. The Power Minister is meeting the Interim Finance Minister and Coal Minister on the issue of Allahabad High Court order, which stayed RBI circular, which was dated 12th of February this year. The RBI circular meant that even one-day delay in payments by these stress assets will lead to resolution. So on that matter, the idea is to discuss it with the Power Ministry and come out with a resolution. Remember, SBI has come out with a plan, Samadhan, for 11 power projects, and we understand that REC is also preparing one plan to rescue the power stress assets in the sector called Parivartan. So over 2 lakh crore is under stress in the power sector alone. Some of the other details that we understand from sources is that coal shortage in the power sector for these assets which are really under stress is also something which will be discussed, and also the idea of quantum which is set aside for e-auction and methodology under which the e-auction of linkage is done for these power plants as well as the captive power plants. Commercial mining of coal is another thing that is going to be discussed between the two ministries. We'll have to wait for the outcome. Back to you.
All right, Anshu, thanks very much. Important meeting, and we'll come back to you to get all the updates. With that, we wrap out of this edition of Bazaar. Markets looking good. Lots of trading ideas coming up for you next on Chartbusters.